It's true that thematic investing can come in different shapes and sizes, ranging from the very niche to the far-reaching. We believe in creating definition and balance. Our approach focuses on maximising the ability to generate excess risk-adjusted returns through different market cycles. Alpha for us encompasses both thematic alpha, fishing in the right pond and constructing an attractive and well-balanced investment universe, and generating value through stock selection, identifying companies that have material exposure to the theme through their operations, but also companies with demonstrated leadership qualities in specific areas related to the theme. In short, we look to define a focused opportunity set of around 250 companies that embodies the growth opportunity while having the ability to construct a well-diversified yet concentrated portfolio of less than 50 holdings. That encompasses both companies of different nature, operating across various industries and relating to different end markets, encapsulating different verticals of the economy. We're also recognised for integrating extra financial considerations within our process, while seeking to unearth opportunities across under-researched small and medium-sized businesses that represent both differentiating factors to our approach. Automation and technology brought about by artificial intelligence and robotics are changing the way we live, interact and do business. These trends are rapidly impacting all aspects of our lives and every part of the economy. This year again, we outperformed global equity markets and the fundamentals of our companies remain solid. Growth has picked up and the environment has improved following the pandemic, and the adoption of technologies in our theme witnessed further acceleration and a broadening of use cases. Moreover, this theme is taking full advantage of some of the consequences of the current environment related to the shortage of manpower in certain industries, logistics, industrial production, for example, that favours also automation and therefore the adoption of robotics. The digitalisation of our working environments, office or not, and the desire of companies to make productivity gains to improve the visibility of their supply chain or to engage more strongly with their customers is favourable to software and artificial intelligence. Over the last few months, we have seen a steady evolution of our investment universe driven by two main factors. Sustained M&A activity. Since the end of October 2020, 4 companies in the portfolio have been subject of takeover offers: Xilinx, Coherent, Nuance Communications and Blue Prism. In our opinion, these transactions reflect the attractiveness and even the necessity of certain technologies. It is also interesting to note that these transactions took place in various markets: semiconductors, industrial lasers, medical automation and software, which is a testament to the application of our theme to all areas of the economy. Other companies within the portfolio have also been pursuing acquisitive strategies, which further reinforces the previous point. A significant number of IPOs across different end markets and sectors is the second point. We witnessed the emergence of a good number of robotics players with a more pronounced bias towards logistics and collaborative robots, software players, logistics management, customer relations, cyber security and also data management, and also medical companies, precision diagnostics, drug research and laboratory automation. We enter 2022 reassured by a satisfactory earnings season and remain true to our investment philosophy, disciplined in terms of valuation, with valuation multiples that on average have settled at reasonable levels as we exit 2021, and highly selective in allocating capital to the companies we own, favouring quality and visibility, coupled with strong financial profiles and earnings growth power. We will, however, remain vigilant on the direction of certain issues such as cost inflation, raw materials and logistics in particular, which have had and may continue to have an impact on certain stocks in our universe, particularly in the more industrial part of factory automation. Conversely, we believe that a large proportion of our investments, such as software companies, are relatively immune to these factors, as their main challenge remains their ability to constantly innovate and attract and retain talent, whether engineers or sales personnel. Finally, after another year of double-digit absolute performance, we've reconstituted a cash position of close to 5%, that could be deployed thoughtfully, notably towards companies in which we are not yet invested and that would provide further diversification for the portfolio. Clearly, end markets are expanding and our investment universe's borders are continuously evolving. All sectors are impacted and we believe that companies have no choice but to embrace these technologies to remain competitive. The opportunities are multiple. In the field of medical research, computing capacities available nowadays allow artificial intelligence algorithms to screen hundreds of thousands of molecules by simulating their therapeutic potential in silico or by a computer rather than in vitro or in vivo. Simulation itself knows no limits. From 5G coverage in cities to autonomous vehicles or autonomous robots in a logistics centre, everything now can be simulated in a virtual environment, which accelerates the time to market for both products and services, often at much lower cost. These simulation capabilities also open up new fields of possibilities with the growing awareness of the metaverse, a connected virtual world that could once again completely disrupt our habits and where certain technologies from our theme will have a major role to play. As we've witnessed during the pandemic, over-reliance on distant geographies for manufacturing poses both economic and national security risks. Governments around the world have taken good note of it. And we're seeing incentives for reshoring production facilities for semiconductors, for instance. The reshoring trend can be witnessed mostly in developed economies that have in most cases underinvested in their industrial footprints or relocated their plants to low labour cost countries for decades. It is therefore fair to assume that enterprises and governments will try to build modern manufacturing capacities which should drive improved demand for connected machines, devices and software platforms that will handle the data generated at the manufacturing level. In a nutshell, this could act as a catalyst for Industry 4.0 and the industrial IoT, all sustained by deployment of 5G. Another area where AI is having growing applications is obviously the workplace. This can range from absence management, expense management, performance management, and increasingly customer service, where chatbots can process a lot of small-scale data very fast, digest information, and react accordingly. Being active, in our view, is the key to survival, and for every attractive long-term business opportunity, there are numerous companies on the losing side. Being active is also key to delivering repeatable and consistent performance. At the core of our active approach, we remain laser-focused on fundamental analysis and valuation discipline, ensuring that we continuously reassess our views and best position the portfolio for the long term while maintaining the latitude to adjust the portfolio depending on market configuration and outlook over the shorter term. In our view, having a driver at the wheel with demonstrable expertise is key in navigating successfully a theme that provides growth opportunities across very different verticals of the economy.